What is going on, everyone? Welcome back to the channel. You know, it's good to see all sides of your investment. The good, the bad, the ugly, the wonderful, the profitable, the maybe not so profitable. That way you don't get tunnel vision. You don't get objective blindness. You can use your peripheral vision to see things that might be coming up to blindside you before other people. And part of that is reading articles and news and things that say, well, cryptocurrency is a bad thing. So we're going to do one here and discuss it as we go. This is from sciencealert.com. Link will be in the description box below. The cryptocurrency crash is great news for the rest of the world. Here's why. I have a feeling that we are going to see that they are taking a single-minded perspective. That they're taking the perspective that there is only 3 cryptocurrencies ever in existence. And that'll be Bitcoin, Ethereum, and I don't know what other random cryptocurrency that they choose. I haven't read this yet. I wanted to react to it live. So, cryptocurrencies like Bitcoin were meant to be used as digital cash. Instead, they've become popular as speculative investments. Okay, let's stop right there. Every investment, every market class is speculative when it starts because you have no idea where it's going to go. And as it goes, it gets even more speculative until it actually makes it big. Reason being is because you don't know what kind of use cases are going to happen. You may have this stock of a company and they think that it's going to do one thing, but as time goes on and people start using it, they find other cool uses for it, or they find out that the uses that it says that it's going to do, it does not do. So yes, everything in the beginning is speculative. Everything. That's kind of the way it works until it shows that it's no longer a speculation that it'll work. As well as being resource intensive and inherently wasteful. Yep, I knew it. They are going to be of the standpoint that there's only one cryptocurrency in the world, and that's Bitcoin. Yeah. How many times do we see this? Bitcoin is the market leader, and Bitcoin has brand name recognition. And for some reason, a lot of people believe that that's the way all cryptocurrencies work, that Bitcoin is the way they all work, and it's just not the case. They need more education. As well as being resource intensive and inherently wasteful, cryptocurrencies are also incredibly volatile. Prices for the largest cryptocurrencies, Bitcoin and Ethereum, have both dropped by over 55% in 6 months, leading to some to suggest that regulation is needed to contain the turmoil. Okay, dropped by over 55% in 6 months. Okay, how about they are up like thousands of a percent when you zoom out? Depending on where your entry point is, you might still be in massive amounts of profit. So they pick a point in time about 6 months ago where they can say it's down 55%. But yet if you go further back, let's say 2 years, 3 years, 5 years, well, you're in profit. I mean, it's all a matter of perspective. Not everybody got into cryptocurrency and Bitcoin, these darn Bitcoins, 6 months ago. Some people have gotten in early. Some people have gotten in way early. Some people are still millions of a percentage up. At one point, Bitcoin was less than $1. What about those people? Do you think they're sad at Bitcoin dropping down from 68,000 down to what, 28, 29? No, because they wrote it up from less than $1. They're happy. It's all a matter of perspective. But for this article's purposes, they've chosen 6 months ago because it sounds sensational. And you can't blame them. You really can't. Sensational news sells. Some are blaming sliding prices on one specific contagion, a collapsing stablecoin called Terra USD. Contagion. I mean, I get what they're getting at, but they're saying that one project going down in the cryptocurrency world infected all the others, and all the others are going down. But I mean, contagion. I know they're making it sound as sensational as they possibly can, but called Terra USD, which is supposed to be pegged to the US dollar. But the current cryptocurrency market crash is more likely a combination of lots of factors. It's always a combination of lots of factors. For years, interest rates have been close to zero, making bank bonds and treasury bills look boring as investments, while cryptocurrencies and digital non-fungible tokens linked to artwork look appealing. And they do. And NFTs are starting to cool off a little bit. But yes, the percentage gains are there over bonds. However, the U.S. Federal Reserve and the Bank of England recently increased interest rates by the largest amount since 2000. Continuing COVID controls and Russia's invasion of Ukraine have also sobered up the markets. You know, it's in times like these that it's actually a good thing, because when the market is going up, it is very easy to hide a scam. It's very easy to hide embezzlement because the market is going up and you can fake gains. But scams and embezzlements and things like that, when the market crashes, they get revealed. When the tide goes out, then you see who's been swimming without their trunks on. Who said that? Warren Buffett, right? It's either Warren Buffett or Charlie Munger. I can't remember which, but I'm pretty sure it was Warren Buffett. And that's true. When the tide is rising and the market's going up, it is really easy to keep your investors happy because, well, you're getting gains to cover your scam. But when the market crashes, well, they're all revealed. So that's actually a kind of good silver lining to this crash. Bitcoin was designed to be indifferent towards governments and banks, but investors generally aren't. They're cutting sources of risk from their portfolios and dumping crypto. Yeah, because the market is emotional. The market is run by human beings. Human beings are the ones that are giving and taking the cash. And human beings are emotional. Crypto's loss, climate's gain. Yes, here we go. Here we go. All cryptocurrency is bad for the environment, right? Although it's not. Algorand is green. There are a few cryptocurrencies that are green. Even carbon neutral or carbon negative. Although I don't agree with the sentiment of being able to buy yourself carbon negative. That makes no sense to me. But that's the way it is. Crypto's loss, climate's gain. The most polluting proof of work cryptocurrencies like Bitcoin, yes. Ethereum, yes. And Dogecoin, yeah. Together use around 300 terawatt hours of mainly fossil fueled electricity each year. And that's a lot of electricity. That's a couple small countries or one medium-sized country. Bitcoin has an annual carbon footprint of around 114 million tons. That's roughly comparable to 380,000 space rocket launches, or the annual carbon footprint of the Czech Republic. And when you throw in Ethereum and Dogecoin in there, it's a more populated country. Proof of work mining can be thought of as a controlled way of wasting energy. I actually really like that, and I agree with that quite a bit. I just wish that they would see that there are other things other than these darn bitcoins. The process involves specialist computers repeatedly taking random shots at guessing a long string of digits. The amount of computing power dedicated to this effort is referred to as the network's hash rate. And as time goes on and every halving goes on, it's going to get more and more and more complicated. And what happens when it gets more and more complicated? It gets more and more energy intensive. If the hash rate drops for any reason, because of power cuts or price dips, for example, the difficulty of the guessing game is automatically adjusted to ensure the network can find a new winner every 10 minutes. Each winner then gets a go at verifying transactions occurring on the network and is awarded 6.25 newly minted Bitcoins. And as long as it's profitable that way, it's going to keep going. Profit. Money makes the world go round. Whether the guessing game is profitable or not depends on how much the mining outfit has paid to set up their computers and for the energy to run them. And I know. People are still going to fall back on but certain studies have shown that the majority of Bitcoin mining is renewable energy. However, the jury is still out on that. There are competing articles, there are competing studies that say opposite things. Some say that the energy Bitcoin uses and Bitcoin mining worldwide on average is mostly fossil fuel. And then there are others that say it's renewable energy, but regardless of which, it doesn't even matter. It matters not one iota, because the court of public opinion is speaking. And as years go on, the environment, the climate, is going to be even more prevalent in the conversation. It's going to matter even more. How do we know this? Because it's mattered more and more as time goes on. It's not going to all of a sudden stop. 10 years ago, it wasn't as important. It wasn't as in the conversation. It wasn't in the lexicon as much as it is now. So that shows a pattern. You want technical analysis? If you look at climate change and the concerns of climate change, well, it's getting more and more prevalent. So we take that technical analysis and say in the future, it's probably more than likely going to be an even bigger deal. Good. With the Bitcoin price falling, the financial incentive to waste energy for mining Bitcoin should be lower. In theory, that's good for the climate. Or in theory, what might be good for the climate is people jumping ship from Bitcoin over to like Algorand. There are other options. Bitcoin and Ethereum are not the only cryptocurrencies. I know it seems like it because they get all the attention. But there are more options out there. But surprisingly, the network's hash rate and carbon footprint remains very close to its all-time high, averaging around 200 quintillion hashes per second. And the reason is because people like money. And that's simple. Money makes the world go round. Human beings like money. And that's all there is to it. We like moolah. We like cash. We like our family to be taken care of. We don't like to struggle. So as long as you are making something profitable, people are going to do it. The scale of this continued interest means Bitcoin mining at current prices is probably still profitable, but for how long? And that's the key, for how long. Bitcoin is not bulletproof. At some point, if public opinion says enough is enough and Bitcoin mining is bad for the environment and we're done with it, well, then the government can step in and they can stop it. Bitcoin is not bulletproof. Tipping points and death spirals. Dun dun dun. Boy, sounds so ominous, doesn't it? Bitcoin's value has temporarily dropped below the estimated cost of production several times before without significant long-term damage to the hash rate. But should the market stagnate for long enough, proof-of-work cryptocurrencies will start to see an increased number of miners capitulate and come over to proof-of-stake. But why wouldn't they? They've already got the rigs. They're already into cryptocurrency. They're already proficient at it. They already know the lingo. So the next natural step is to get into the next natural thing. Proof of stake. Which ones are the best proof of stake? Well, in my opinion, the best is Algorand, but you got XRP as well, and a few others. But either way, if that happens, our market, the proof of stake market, will go up. Algorand's price will skyrocket. Miners with the highest costs are likely to sell off their Bitcoin holdings as profitability drops, creating even more selling pressure in the market. Short-term capitulation among smaller mining outfits with high costs, often using intermittent renewable energy, is normal. Yeah, the smaller rigs are always hunting around for wherever the best energy is, and they do switch. But a domino effect with major mining firms closing down one after another could cause crypto prices and the network's carbon emissions to drop rapidly towards zero. This event is called a Bitcoin death spiral in crypto speak. And I believe if a Bitcoin death spiral happens, then the other coins are going to follow suit, Algorand included, because Algorand also is not bulletproof, to a point. Once they drop low enough, and I'm saying if this happens, and Bitcoin's death spiral is happening, I think it might crash, but Algorand at some point will drop, but then recover. Because it's a good project. It's got connections. It's got use case. It's got the ability to actually be spent. You're not going to spend Bitcoin. You're not going to the store. You're not buying gum with Bitcoin. You're not buying a soda with Bitcoin. You're not getting gas with Bitcoin. You're not paying your rent with Bitcoin. It's just not going to happen. It's a store of value, something you put money into and lock it away for an extremely long time. We're talking decades. And it's the only way that it would be profitable is to store it away for that long period of time. Algorand is spendable. You can use it. Algorand is something you can build upon. You can build dApps on it. Algorand has a bright future. It's got actual use case. I will capitulate and call Bitcoin gold, okay? You don't walk around with gold in your pocket every day, do you? You lock it in your safe. You put it in your bank, in a safe deposit box. You stash it. You hide it. You store it. You don't take a knife out and shave a thin piece off your gold brick, stick it in your pocket, and then start divvying it up to buy things with. It's just not the way it works. Bitcoin is like gold. Algorand, however, is easier. It's cheaper. It's spendable. You can build upon it. It's scalable. Besides Bitcoin mining price predicaments, there are other potential tipping points to consider. There's always tipping points to consider. Many big investors, especially those who bought in at higher prices, are currently underwater, weighed down with big bags of Bitcoin, and the sale pressure to cut their losses is going to be immense. And with that huge sale pressure, expect the prices to drop even more because some of them are going to sell, which is going to create even more sale pressure. El Salvador's president has reportedly just brought his country's total reserve of Bitcoin up to around 2,300 or $72 million at current price. His country's crypto losses are adding to fears of an imminent debt default that would cause significant pain to those who had no say in their leaders' gamble. Yeah, and it is a big gamble. It's a big, big gamble. It's the same thing as Terra Luna and that whole debacle, and they're trying to shore up their price in case of a cryptocurrency market crash with Bitcoin. But if there's a cryptocurrency market crash, Bitcoin is the one that's crashing the hardest. So you're going to shore up your project by buying, what was it, $2.3 billion worth of Bitcoin? And then when the price crashes and it's only worth $3,000, you're going to shore up. Yeah, no, you're not. It's a fundamental flaw in the system. You can't do it. You can't shore up a project against a cryptocurrency crash with the leader of the cryptocurrency market, because in a crash, it's also going to be the leader on the way down. It's just the way it works. So you're trying to shore it up with something that is going to drop during the very time when you need it to not drop. Do I believe it will recover? Yeah, I believe it will recover. I'm pretty sure Bitcoin is not going to zero. It's just whether they can hold on or not. See, Even entire countries can invest more than they can comfortably lose. Don't do it. Only invest what you can comfortably lose. If the market crashes and the market goes to zero, I don't want you guys to struggle. I want you guys to be happy. I want you guys to be like, all right, it was a nice run, but nothing has changed. We're not suffering. And that's the way you do it. Because when these dips happen, you're going to be itching to sell because, well, you need the money. But if you don't need the money, you can leave it there and see what happens. And then if it goes up in the future, well, you've made your gains on the other side because you could stomach them. Bitcoin ban or Bitcoin boycott. Prominent investors may find Bitcoin bear markets a bore, but research shows the environmental losses from high-priced cryptocurrencies are far more disturbing. Again, there are other cryptocurrencies other than Bitcoin. I know Bitcoin's the big boy. Bitcoin's the McDonald's. It's the trailblazer. Brand recognition. But there are other cryptocurrencies out there that are not bad for the environment. The damage caused by Bitcoin mining disproportionately affects poor and vulnerable communities as mining outfits and crypto developers take advantage of economic instability, weak regulation, and access to cheap energy. Well, imagine that. Human beings being human beings and wanting to make money, you leave doors open, people are going to step through it. You leave weak regulation. Can you blame them? I can't. They're doing exactly what human beings do. This should be known. If you leave the door open and there's money sitting inside, someone walking by is going to reach in and take it. That's just the way it is. Locals wanting to use these resources for productive purposes can be priced out by Bitcoin miners. These communities also tend to face the sharp end of the climate crisis, which crypto mining fuels. Which Bitcoin mining fuels. See, you see how this is the world's view from some perspectives. That all cryptocurrencies are like Bitcoin. All cryptocurrencies are bad for the environment. And these are things that we need to know about. So that way when people start discussing it, we can be like, well, hold on a second. I understand what you're saying. Yeah, Bitcoin is pretty intensive. It's a heck of a project. And it uses a lot of electricity. But did you know that there are these other things out there, these other cryptocurrencies that don't, that are not bad for the environment, but rather good for the environment? Not only do they have a zero carbon footprint, but they're also doing things to help the environment. They are putting money into the environment to try to counteract these other big corporations. And I know these big polluting corporations have soured the mouths of many people. But if big corporations have polluted the planet, then it's going to take big corporations to unpollute the planet. Governments worldwide want to appear keen on cryptocurrencies as tools for economic growth. Yes, they want the visuals. They want people to see them as the cryptocurrency capitals of the world. There are entire nations, entire states, entire cities, all competing with each other. Pick us, pick us, pick us. We want to be known as the cryptocurrency capital of the world. We want to be known as the crypto hub of the world. Okay, I get it. And that's good things, because competition breeds competition, which breeds good stuff. It breeds good regulation. It makes for good policies. But the crash shows that Bitcoin is both useless as a mainstream means of exchange and as a reliable store of value, bringing most users far more pain than profit on the short term. But you're only looking on the short term, and you're doing that on purpose because it's sensational. I get it. And there are other things other than Bitcoin. The way this article is framed, it makes it seem like every single crypto, because they don't say Bitcoin mining or anything like that. They say crypto. Governments worldwide want to appear on cryptocurrencies, keen on cryptocurrencies. But the crash shows that Bitcoin is useless as a mainstream and as a reliable source of value. But they don't ever mention other ideas. Proof of stake exists. It's a thing. And that's on purpose. They're framing a narrative. In the aftermath of the 2008 to 2010 global financial crisis, governments promised a crackdown on toxic financial instruments with make-believe valuations. For the global climate and a stable economy, cracking down on crypto will be a boon for everyone. No. Cracking down on certain crypto, maybe. But you stifle innovation. Traditional finance uses more electricity and is worse for the environment than Algorand. Algorand uses less electricity than traditional finance takes. Plus, it cuts out the middleman, making fees cheaper. If we keep going the way that we're going, nothing's ever going to change. Nothing's ever going to get cheaper. The unbanked are never going to get banked. And they're lumping everything into Bitcoin. They don't say cracking down on Bitcoin. They say cracking down on crypto will be a boon for everyone. And that's a sentiment that we need to understand exists. So that way we can fight it. We can combat it. But if environmental regulation efforts are not globally coordinated or far-reaching enough, crypto's climate contagion will continue to grow. Gosh. Really sensational there. There are other projects. And this is an issue because I see it everywhere. Bitcoin and Ethereum. Bitcoin and Ethereum. Bitcoin and Ethereum. Thank God it's finally changing. Thank God Stacey Warden with Algorand is finally advertising and marketing. And the marketing is working. Every day we hear of new partnerships. Wormhole. They've partnered with Algorand now, too. I'll be doing a video about that one tomorrow. I appreciate you guys. You guys are amazing. The bad sentiment. Bitcoin kind of leaves a bad taste in a lot of people's mouths, especially those who are concerned about the environment. But we can hand them a glass of Algorand. They can swish it around their mouth and get the bad taste of Bitcoin out and understand that Algorand is carbon negative. It doesn't use a lot of electricity. It's a pure proof of work. And it's fast, it's scalable, it's secure. This sentiment is something I see everywhere. And as long as we know it's there, we can combat it and say there's other options. I appreciate your time. You guys are amazing. And I will see you guys on the next one.